Hey everyone, welcome back to Corporate Decoder, where we take complex financial documents and make them sound like a fun chat. And today we've got a doozy of a filing from Fidelity Court Street Trust, a company that manages mutual funds. And let me tell you, their latest report is packed with numbers that paint a picture of how their investment funds are doing, especially Fidelity Connecticut Municipal Income Fund, and Fidelity New Jersey 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 Municipal Income Fund. So what's the big story here? Well, it boils down to how well these municipal bond funds are performing, holding up against market conditions, and what that means for investors. Think of it like checking the health of two different portfolios, seeing what they own and how much they're worth. We'll be diving into the nitty-gritty of their investments, their financial health. First up, let's talk about Fidelity Connecticut Municipal Income Fund. This fund is all about investing in municipal bonds from Connecticut, aiming to give investors steady income. Now, looking at their investments, a massive 99.4% of their total assets are tied up in securities. That means almost all of our money is in the market. And what kind of securities? Well, a whopping 95.4% of that is in municipal securities. This shows a huge focus on this specific type of investment for the fund. Within these municipal securities, the biggest chunk, a significant 49.1%, is in general obligations. These are bonds backed by the taxing power of the issuer, which is generally seen as a safer bet. But it's not all bonds. They also hold 40% in money market funds. This is like a small safety net, offering a bit of stability and easy access to cash. This is a decent chunk for a money market fund when compared to their total securities. And the net assets summing up everything the fund owns after debts stood at a substantial $303,295, $798. Checking out the statement of assets and liabilities, we see their total assets were a little over $306 million. And the total liabilities were around $2.2 million. This gives us a snapshot of their overall financial standing. Now let's look at how the fund made money and spent it in the 6 months ending May 2025 in the statement of operations. The fund earned significant interest income, bringing in $4,817.656. But they also had expenses totaling $728,832. All in all, their operations caused a net decrease in assets of $4,579,885. This indicates the fund spent more than it earned from its core investments during this period. And if we look at the financial highlights specifically for the Fidelity Connecticut Municipal Income Fund, we can see some interesting per share data. The net asset value per share started at $11.03 and ended at $10.73. This shows a slight decrease in the value of each share over the period. Their total return was reported at a negative 1.45% for this 6-month period. This tells us that if you had invested $100, you would have lost about $1.45. Interestingly, the portfolio turnover rate was 8%. This is quite low, meaning the fund managers weren't actively buying and selling a lot of their holdings, suggesting a more long-term approach. Now let's switch gears and look at the Fidelity New Jersey Municipal Income Fund. This one clearly focuses on New Jersey municipal bonds. For this fund, a massive 100.1% of its assets are in securities, which is almost the entire pie and then some. And like the other fund, a huge 94.6% is in municipal securities. This shows a consistent strategy of focusing on this asset class. The largest segment here at 37.6% is also in general obligations, indicating a preference for these potentially more stable bonds. They also hold 5.5% in money market funds, giving them a slightly higher cash cushion compared to the Connecticut fund. The net assets for the New Jersey fund were a much larger $581,720.662. Their statement of assets and liabilities shows total assets just over $591 million, with liabilities sitting at about $9.4 million. Looking at the statement of operations for this fund for the same 6-month period ending May 2025, they generated $9,671,334 in interest income. And their expenses were $1,000 D273.61. This resulted in a net decrease from operations of $11,550,025. So like the Connecticut fund, this one also saw a net drop in assets due to its operational activities. Moving on to the financial highlights for the Fidelity New Jersey Municipal Income Fund. The net asset value per share began at 11.70 cents and ended at 11.29 cents. Again, we see a decrease in share value. This fund's total return was a negative 2.07% for the period. That's a bit worse than the Connecticut fund. The portfolio turnover rate here was 13%. This is still relatively low, suggesting a similar buy and hold strategy. Now, let's look at the statement of changes in net assets for both funds. Essentially, this table shows how the fund's total value changed over the period due to operations and share transactions. For the Connecticut fund, operations led to a decrease of $11,550,025. But share transactions actually increased its assets by $46,311,317ing them. This led to an overall increase in net assets of $26,414,075 for the Connecticut fund for the period. And its net assets at the end of the period grew to $581,791,000. For the New Jersey fund, operations decreased assets by $11,550,025. And share transactions also decreased its assets by $4,623.80. This resulted in a total decrease of $13,200.844 for the New Jersey fund, bringing its total net assets down to $303,935,000. The investment valuation section is crucial. It breaks down how they value their holdings. Most of their municipal securities are in level 2, meaning they are valued using observable market data. However, the Connecticut fund has about $3,900,000 in level 3 securities. These are valued using less observable data, which introduces a bit more uncertainty. When we look at the overall picture, both Fidelity Connecticut Municipal Income Fund and Fidelity New Jersey Municipal Income Fund experienced a decrease in their net asset value per share and negative total returns for the period. This suggests that the market for municipal bonds, especially those tied to specific states, might be facing some headwinds, or that the fund's specific holdings didn't perform as well. The quality diversification tables show a heavy reliance on AA and A-rated bonds for both funds, with a smaller portion in BBBB and below. This generally points to a strategy focused on higher quality, though the specific percentages vary between the funds. Interestingly, the costs for a hypothetical $10,000 investment are quite low. For the Connecticut fund, it was just $24 or 0.47%. For the New Jersey fund, $22 or 0.45%. This is a really positive sign for investors, showing that Fidelity keeps its fees down. Key fund statistics reveal the New Jersey fund is much larger, with $581,790 6062s in assets compared to the Connecticut fund's $303,090 $35,298. This larger size could offer some benefits in terms of diversification and stability. Despite the low cost and focus on quality, the negative returns are the main point of concern. Their strategy of holding municipal bonds is sound for income generation, but the market performance during this period was clearly a drag. The opportunity here lies in the stability that municipal bonds often provide, especially during uncertain economic times. However, the risk is tied to interest rate sensitivity and the specific economic health of Connecticut and New Jersey, which could impact the issuers of these bonds. Overall, Fidelity's approach to managing these funds appears conservative, with low fees and a focus on quality, which is good for investors. However, the negative returns and slight decrease in net asset value per share suggest that the market conditions or the specific bond selections didn't play out favorably during this particular reporting period. It's a mixed bag, solid management practices, but a challenging market environment as reflected in the financials. Alright, that's our breakdown of Fidelity Court Street Trust's latest filing. What's your take on these numbers and what they signal for the fund's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.